Let's talk about SoFi Technologies. SoFi is a fintech company that has been getting a lot of attention in the past week and is once again one of the most traded stocks in the world. This stock is traded with the ticker SOFI. With the share price having dropped to recent all-time lows, is SoFi really worth it? With the upcoming SoFi Earnings report due on Tuesday, in this video I will discuss the latest news and the impact that this will have on SoFi as a company and assess the opportunity that exists right now. But with huge reward comes huge risk, and I will discuss both the positive and the negatives in this video. If you like the content, help me grow this channel. Smash the like button and drop me a comment. Small channels like this only grow if the videos are getting likes and comments, so let me know what you think of SoFi stock right now and if you consider this stock to be a buy, a hold or a sell. I'm aiming to get 300 likes on this video, help me make that happen. Subscribe to the channel if you're new and hit the bell notification. You never miss a video with the potential to make you money. I want to point out that I'm not a financial advisor and this is not financial advice. Now let's get into it with a brief overview of the company. If you are new to SoFi Technologies, SoFi is an online personal finance company based in San Fran. They provide financial products such as student loans, mortgages, personal loans, credit cards, investing, and banking through their mobile app. As it says on their website, SoFi's mission is to help people reach financial independence to realize their ambitions. SoFi went public in a SPAC merger with Chamath Palihapitiya's company IPOE in July 2021. The deal was announced back in January 2021 and was finalized in July, but SoFi was founded in 2011. In this time, SoFi has developed a comprehensive suite of products that offer the speed, selection, content, and convenience only an integrated digital platform can provide. SoFi is headed by CEO Anthony Noto. Anthony is a vastly experienced professional who previously joined Goldman Sachs in 1999, and by 2003 he had become a managing director, becoming a partner in 2004 before leaving to become Chief Financial Officer of the NFL. He later returned to Goldman, where he headed up global investment banking before joining Twitter in 2014. He held the role of Chief Operations Officer at Twitter before joining SoFi as the new CEO in 2018. As we can see here from the investors presentation, SoFi's revenues have been greatly increasing during this time, going from just 241 million in 2018 up to 912 million for the last 12 months, while also achieving positive EBITDA, and I will discuss this a bit more in just a moment. For years, this company has been used as an alternative to banking. They offer products that a bank offers without being an actual bank. This actually increases costs for the company in terms of how much it has to pay to acquire funding. Looking at the charts, we can see that after SoFi went public in 2020, the stock price rose into the mid-20s, was extremely volatile throughout 2021, often dropping into the mid-teens and then rising back into the mid-20s. However, since November 2021, SoFi has been on a steady decline. Looking closer at the chart over the past 6 months, we can see that each time SoFi has released their earnings report, the stock has nosedived in the weeks afterwards. Here in November, the stock lost about 40% of its value in just 5 weeks, and again in March, after the earnings report was released, lost about 40% once more. In fact, the stock dropped to its all-time low of $6.01 earlier this week. So with SoFi stock at all-time lows, is this a good time to buy the stock? Or will the stock price crash once again once the earnings report is released? So there's a lot of matters to consider. First of all, back in February, SoFi concluded a $750 million purchase of Golden Pacific Bank. Golden Pacific has been renamed SoFi Bank National Association, with Golden Pacific's bank community bank business now operating as a division of SoFi. So what does this mean for SoFi? With a national bank charter, SoFi will be able to lend at even more competitive interest rates and provide high-yielding interest in checkings and savings. It will also enhance financial products and services to meet the demands of members, business partners, and communities across the country. In other words, by cutting out the middleman, SoFi gets a bigger slice of each transaction, and CEO Anthony Noto has said that a national bank charter will allow lending at more competitive interest rates. Then this week, there was some news that seen SoFi jump from its all-time lows. Galileo and MasterCard unveiled a multi-year strategic alliance focused on accelerating digital transformation and improving access to financial opportunities for unbanked and underserved segments in Latin America and the Caribbean. This partnership will enable Latin American fintechs and issuers to build and launch digital financial services using the combined capabilities and infrastructure. The companies will distribute various MasterCard products and services to support their customers. But for now, the main focus should be on the company's earnings report, which is due after hours on Tuesday. So this article on Seeking Alpha does a very good summary of what can be expected. SoFi, critical time approaches. Its revenue is likely to amount to $299.5 million, up 263% year over year. However, the company is faced with serious risks that can temper its growth going forward. So skipping down here to measuring its core performance. Their Q4 full year 21 revenue was up 335% against its comparable quarter from 2019. But it will be all the more important to assess if the company can keep growing at these breakneck rates, operationally and financially, or if it succumbs to macroeconomic pressures. SoFi discloses two metrics in particular. The member count, where the SoFi member count has increased by a massive 391.5% over the past 12 months alone, but market competition, rising interest rates, and changes in the macroeconomic environment overall can dampen its member growth and limit its financial growth. The second metric here is product volume. Ideally, as SoFi expands its customer base and adds new financial products, new cross-selling or upselling opportunities should open up and its product sales should continue to grow rapidly. And rising interest rates should encourage its customers to refinance their personal and home loans with SoFi in a bid to save on interest repayments, which could further catapult this product volume growth. SoFi segregates its revenue into three reporting segments. Its lending segment is the largest in terms of revenue, accounting for roughly 74%. It is expected that SoFi's revenue will more or less remain flat, with the actual figure coming out to be around $213 million. SoFi's technology platform segment accounted for 18.4% of revenue, but the market is still underpenetrated and SoFi's sales effort is ongoing. An estimated growth rate, which is similar to previous quarters, would post a revenue figure of just shy of $56 million. The author of this article expects that the smallest segment, the financial services, is where SoFi will see the most growth, estimating its revenue to grow at least 36% sequentially, which is basically the average growth rate of the past two quarters, and register revenue of $29.8 million. Which gives a company-wide revenue estimate of $299.5. This figure is in line with Wall Street estimates, which span from $286 up to $302 million. So this figure would actually be on the higher end of the scale. Now, as I said already, SoFi stock has tumbled on each of its previous earnings reports. And we have seen other major companies so far suffer huge drops recently on the back of missing guidance. SoFi will be judged on much more than just earnings on Tuesday. Take Netflix for example. Over the past month, Netflix has lost approximately 50% of its value due to missing on its new subscribers' guidance. Or in the past week, Lyft stock tanked over 35% after delivering a bleak second quarter outlook. So the author's final thoughts. SoFi shares are down almost 70% in the past 6 months alone, and many investors feel it's oversold. However, the stock is trading at 6.6 times its trailing 12-month, which is considerably higher than many of its rapidly growing peers, so investors shouldn't be too tempted by the price action alone. Monitor SoFi's members count, its products growth, segment financials, and its management's outlook. These items will better highlight SoFi's growth prospects and are likely to have a bearing on where the shares are headed next. And analysts seem to be divided on SoFi now too. Zacks Investment Research downgrades SoFi to a sell, but the analyst rating consensus in general is still a buy based on 13 analyst ratings, with an average price target of $15.88, which is over 140% upside from the current price of $6.44. This is despite all of these analysts lowering their price targets back in April, but most did not change their ratings, and these price targets are all still far above the current price. And we can see that the trading volume has been very high over the past month, up to an average trading volume of over 43 million shares. But even in the past few days, this has been showing volume of over 50 million, making this one of the most active stocks on the market. Amazingly, 75% of my viewers are still unsubscribed. That means that 75% of viewers more than likely missed out on the likes of Redbox, which I first alerted at $3.37 last week, just before this ran to over $10 in less than 48 hours, so don't miss out. For my conclusion, I think that there is a lot to like about SoFi, but there is also a lot of risks too. As I mentioned already, they will be assessed across several metrics when this earnings report is released on Tuesday evening. As we've seen with Netflix last month, user growth and outlook for the coming months will prove to be vitally important once more. SoFi's quarterly earnings report could be a turning point for shareholders, but if it reports any slowdown, it would suggest that SoFi is succumbing to tougher market conditions, and it could also imply that the firm is losing to competitors. Investing in this stock right now before the earnings report is certainly high risk, but if they manage to beat the estimates, then there could be a large swing to the upside. Remember guys that I am not a financial advisor and this is just my opinion, and not financial advice. If you enjoyed this video, like and subscribe, follow me on Twitter, and I'll catch you in the next update.